A. Balasubramaniam, CEO of Aditya Birla Sun Life AMC joins us now. Bala, good morning. Thank you for joining us. Friday, you met the finance minister. Was it a one-way street? Was she open to, communicating and hearing the concerns of the investor fraternity, or that was just like a routine meeting and you don't expect anything big to come from it?
Yeah, I think I would say that as against the scheduled time of 1 hour, I think they were quite fair to give us 2 hours time. And second is all the people in the room
Bala,
were.
your list was very long.
Yeah, of course, yes. Everybody had long list, and I think they not only they gave 2 hours time, they gave an opportunity for everybody to speak. So that's one which I found it very interesting. And second is they're not just only in the listening mode. They're also, of course, taking somewhat of feedback and suggestions, especially around KYCs, which is again one of the things that industry has been struggling with for quite some time, to making it more ease, especially at a time when technology actually becoming a platform for to be used for expansion of business. And over and above that, I think of course the questions were quite obvious. I think rather the ask was quite obvious, that all around the current regulation around LTCG and FDI, FPI regulatory change that has come recently, and all about the disconnect in the market with the bigger markets doing well, but that the Sensex is doing well, but the rest of the market is not doing well. Generally because of the NBFCs has been out of market from lending side, and unless we actually revive that, how actually things could get better. And lastly, of course, I think one of the trends that we have seen, and while interest rates has been coming down, the transmission of interest rates has not been happening to the extent it should happen. I think all of us expressed a view that there could be two reasons for that. One, the savings rate, which is still being offered by the Government of India through the Reserve Bank of India window, still offers about close to 8% return. Maybe there could be a case actually for that savings rate to be cut in order to help the banks to cut the deposit rates, which in turn will lead to lending rates coming down. Therefore, the transmission could happen. The second part, of course, is while the interest rates has been coming down, the large proportion of the interest rate reduction has been benefiting the bigger companies. Many smaller companies are not getting the benefit because there is a widening of spread in the credit spreads below AAA and AA plus. The rates are actually widened, the spreads are widened. Therefore, there could be some case actually for us to look at the benefit of interest rate should actually seep into most of the small size companies, and therefore bring back the credit confidence.
Sure.
These are the points that are discussed.
On the FPI surcharge and the tenure change for long-term capital gains tax, what was the body language like? Did it indicate that there is going to be a complete rollback of the surcharge on FPI, or is it going to be a tampering? Because there's been a lot of back and forth. I recall that in the first interview with the finance minister, she had indicated why a rollback, and then later on one has really seen a softening of the stance, as much as the Prime Minister himself telling the Economic Times over the weekend that, the government will do whatever it takes to revive animal spirits. So does it seem like a complete rollback is something which is a possibility, and they're taking cognizance of the fact that, it's been an exodus from the FII fraternity from equity markets?
Yeah, I think one of the points which they understood is a healthy capital market is important for the healthy financial system. And that's something which was acknowledged multiple number of times. I think there was no denial that stock market reactions actually doesn't bother us so much.
Sure.
And that's something which I think is very clear. And second is...
Are you saying that they are saying stock market reaction don't bother them? Or
no.
Bothers them.
Of course, in the sense that important from the capital market point of view, though there was no mention about anything related to that. But I think the way they were quite keen in listening to the suggestions.
Did she commit anything? Did she, when you were making a suggestion, was there a yes or was there like this?
I think the fact of the matter is paying attention to all the people who spoke for 2 hours and taking down points. I think that's something which I felt it's quite good from a finance minister and rest of her team members. Keenly taking down all the points that were being discussed.
Is there panic,
something which I
found
it as amazing thing.
Is there panic or is there acknowledgement? Acknowledgement is that, look, I'm hearing yours, but ultimate decision is something which I think is right. Panic is like, look, these are extraordinary circumstances, what I can do to fix it. So what is your sense, panic or acknowledgement?
See, I think one is acknowledgement. And
not panic.
There's absolutely no panic.
Okay.
And the one is acknowledgement. Of course, they realized the feedback that is coming from people that they're all very valid and important. and open hearing itself, in my view, it's an acknowledgement to the fact that things have to get better than what they have felt about. Therefore, I would only assume, since they were quite open and listening to each of the sessions that was coming from every member of the team, coming from different parts of the financial industry, this is something, in my view, could actually help them also come out with some kind of decisions which could actually help in boosting the sentiment in the overall market.
9% higher for Reliance. I mean, this is like a large heavyweight. It's not an ordinary move in Reliance. I mean, Reliance's market cap going up by, it's closer to, it's about $100 billion Reliance broadly in terms of a market cap number. So just imagine what one AGM and what that indication on the fact that Reliance will become a zero debt company. They got capital infusion from they've got capital infusion of about $15 billion plus, and the fact that they are looking at a transformational change in the way Reliance has done business in the last decade to this decade versus next decade. I get markets are mighty excited. So bulls were desperate for some good news, and the good news, I guess, has come from a technical standpoint, at least for Reliance. So Reliance will protect the Nifty. Can it single-handedly change the entire market? No, it cannot. But yeah, for the day, I guess Reliance will ensure that despite a negative handover from global markets, Nifty optically will be in a much, much better shape. Bala, how much of the market right now is largely driven or dragged down because of sentiment? The fact that economy is slowing down is not yesterday's data. It is a 2-month-old data. From March onwards, we know that there was a crunch in the auto space, there was a crunch in the consumption space, and the capex had not revived. But markets, the way they've reacted to this entire slowdown issue in the month of July and early August, I think it's all due to with sentiment. Less with news and more with sentiment.
Yeah, I think it's largely to the one, I think the continuous news flows were pretty not comfortable from the market point of view. And that since the time, I think these whole issues around the financial market coming from the NBFCs and slowed down, then subsequent to that budget, I think month after month, not getting enough good news flows or positive news flows to drive the overall market sentiment. And second is the credit market. And though we have been seeing some kind of resolution coming for some of the credit-related issues, and again, credit market, especially money at the end of the day, it has to be in rotation. If the money is not in rotation, despite liquidity being good, it definitely actually doesn't boost the confidence of the rest of the market. And last, of course, is about US trade war with China. Actually had its own impact in the emerging market, and second is the way I think China has been reacting to the US-China trade war in terms of making adjustment to the currency. Also has its own impact in the emerging market. I think if you look at, while our market is down, there's absolutely no doubt it's been quite some time we have seen actually downfall in the equity market, and especially the divide between the large and mid cap has been widening day by day. I think the news flows in general also not been that great from the market point of view. I only hope that that current the government reaction in meeting people brings up something actually to boost the overall sentiment in the market.
Bala, the animal spirits clearly seem to be amiss from the markets as well as the economy overall. But as an investor who's looking at a longer term time horizon, say, the next 1 to 2 or even 5 years for that matter, is this the time to get your animal spirits out? Is this the decline that you need to buy?
I think it's interesting. This animal spirit is something which always we measure on the basis of the bull versus bear. I think if you see actually the crazy buying kind of sentiment prevails, that can get converted into animal spirit, and therefore money comes back. So I think one should also remember the fact that animal spirit is driven by the consumer sentiment, the buying behavior of people. You have more money in the hands of people, therefore you actually go on buying.
But you also buy fear. So what I'm trying to gauge is this what you need to buy? I mean, is this that opportune time, or will the market give you enough opportunity to buy further decline? Is this decline here to stay?
I think of course, being in the market for so many number of years, right, there is an element of fear factor and the greed element. I think animal spirit actually is coincide with the greed element, and today there is a complete fear factor, and everybody wants to avoid taking any decisions, whether it is buying the stocks or buying actually spending the money.
Sure.
And a lot of people even prefer to actually postpone their buying because of some of the regulatory change that is coming in, and so on and so forth. And these are the occasions one must always remember the fact that I'm a firm believer the price knows about everything. And whatever we speak about that issues are around slowdown and so on and so forth, the price knows about it. And price, of course, reflects such kind of reaction as we move forward. Therefore, it's actually from investors' point of view, even from money manager's point of view, we have to, of course, keep a cool head and look at companies more deep dive and see which are the companies fundamentally, of course, remain strong to overcome the potential issues that could come in the future, and therefore you start owning them.
So where are you hunting?
Naturally, of course, one has to look at, of course, more individual stocks.
Sure.
Even if you look at the broad market point of view, you need to, of course, hide yourself in certain sectors which doesn't get impacted by either by the global slowdown or by the credit crisis. Basically, it's coming from...
Our market men slightly too optimistic on banks, whether it's private or whether it is public. And the reason why I'm asking you this question is because large part of the private banks have grown because of retail growth. That's where the slowdown, I think, is visible, both in discretionary spend and non-discretionary spend. The economy is not doing well, which means the comeback which everybody assumed for an ICICI Bank or in State Bank of India, that again is not going to be all that optimistic. We've seen with SBI numbers also, they were pathetic and they were poor. Do you think somewhere the big surprise on the negative side could actually come from banks, and especially those crowded corporate banks and overowned retail banks?
I think the potential risk in the system could come from the new NPAs that comes in certain sectors. I think so far we have been of the opinion that we will probably see the worst of the NPAs period, and now we'll probably see the NPA recoveries coming in post this IBC resolution. We'll probably see the bank's balance sheet getting better. Having said that, I think the point what you mentioned about earlier, the segment of retail loan growth is moving away from, to some extent, NBFCs actually to the mainland banking system. Therefore, we have been seeing a good credit growth coming from the banking system per se. While that could continue, if there is a general slowdown that you are witnessing in either in auto sectors or general tendency to actually towards spending, actually if it gets reduced because of not so good agricultural output that is being expected, and we'll probably see some bit of slowdown impacting the retail growth. I think the issue around from the banking system point of view, what the kind of incremental NPA that could set in, especially from other new industries, could potentially actually impact some of these banks who are actually moving away from retail to the corporate. Now, of course, wholesale banking also could come under a little bit of pressure if the NPAs actually doesn't stop.
And you touched upon the auto sector, the fact that the NBFCs as well have withdrawn from lending. We have seen the sector as well face quite a few problems. Was that touched upon at all in the meet, or any outlook from you on that space?
Well, of course, there was a mention about that in our meeting, because it's anyway the group of people whom we are represented are financial sector people. Right. And there was also a meeting with which I understand were with the auto sectors and real estate sectors. I'm sure they would have represented that as well. But in our own meeting, I think there was, of course, mention about the general slowdown in the auto sector as well. Of course, the ask clearly from the ministers and other people point of view is give three issues that surrounding the economy and 3 good suggestions. I think most of the people actually took the liberty of giving suggestions, and mostly some of them are implementable kind of ideas. And hopefully they take that forward.
You think a stimulus for the beleaguered sectors is in the works, real estate or autos? Did you get that sense?
Not really. I think one of the area where the government seems to be respecting quite lot is about keeping interest rates under control and keep the fiscal deficit under control and focus on increased compliance around improving the tax collections. While that's being actually the central theme of the whole budget and the central theme of the government of India overall thinking, it doesn't look like actually that fiscal stimulus is actually the way trying to actually bring back the economy.
So Bala, what is the sum and summary? Hand over heart. What is the gossip? What are the whispers you are picking up? Will LTCG be rolled back? Will FPI surcharge be rolled back? What is your guess or maybe information or sense or source telling you?
Of course, it's difficult to say that. Of course, as we always live in the market, we have to live with the hope. And given the fact that the market has given a reasonably good correction, and overall market, of course, echo the same sentiment that all of us are having, that the LTCG is not paying much attention. Even we also made a point that since the time LTCG has been introduced, the overall market has lost market cap close to about 14 lakh crore. Just by keeping the LTCG, whether it makes sense actually to get collection to the government, It doesn't actually. It doesn't. If there is no capital gain, you don't get any taxes. Therefore, I would assume whether now or maybe in the coming budget, probably there is a merit for them to revisit to revive the overall capital market sentiment by looking at some of them actually more closely.
Well, I hope it happens sooner than later. Appreciate your time, Bala. Thank you for joining us. Well,